Hi, this is Zach from Zach's Traders Cafe. We'll look at some major markets on Friday the 30th of September. Rather gloomy in the indices at the moment with the Deutsche Bank fears doing the rounds. Interesting on the technical side of the FTSE, basically we left it very bullish yesterday with the bounce off the RSI 50 level, and the RSI currently at 59 and just about to break recent resistance through 69.20. Presumably today will resolve whether we will have either another bounce off the 50-day moving average 68.02, or whether we have actually topped out for the third time in recent weeks, and this will be the start of a bear move. End of day close back below the 50-day average 68.02 is probably the best signal at the moment to resolve that issue. Onto the DAX, and this has really been obviously it's been all over the place given the issue here with Deutsche. We've had gaps, gap to the downside, failed gap fill with a second gap, and then another gap down today. It'll be interesting to see whether the old 102.65 support that becomes resistance today. The ideal scenario from a trading perspective is we actually head towards the 200-day moving average at 10,019. After that, we've got this support line from the end of June heading towards 9,800. That's a long way away. It would be surprising at least now if we did not hit the 200-day line at 10,119. Onto the US markets, and for them it's all about trying to hold recent support, 18,100, the floor of this triangle from May. So we're just above that on the Dow, 18,402, the 50-day moving average at the top of the triangle there. And that's the range we're at. Easiest thing to do here really is wait for an end of day close outside those parameters. RSI flagging a sell with the double failures through neutral 50. So at least from that perspective, the technicals are saying this is going to break down. For the S&P, we can see that we've got a similar situation to the Dow, that we just failed the 50-day moving average, 2168. 2145, I suppose, the nominal support there, but the real support 2120, and we need to hold above that. Holding above that still gives the bulls the edge, but got this double RSI failure, which looks as though it normally would be a leading indicator on a sell, the type of thing we saw at in the latter half of June with that kink in the indicator window. Onto the Nasdaq, which was the most bullish of the three main US indices. It's basically a gap fill sell-off here with the top of the gap there, 48.53. Below that risks the 50-day moving average of 47.81, and below that on end of day close would then at least temporarily end the recent rally. Onto the currencies, and cable rather marooned below the 130 level in recent days. 10-day moving average resistance as well. That's the green line there at 130.04. Below that, probably it's difficult to see how this can avoid heading back towards 128 to 129 over the next few sessions. For the euro, major support here towards 111.50, and the 200-day moving average at 111.59. We need to stay above that on an end-of-day close basis. A break of that could witness or deliver or unleash a strong move down towards the 110 zone. RSI already below 50, so suggesting that there will be a move to the downside. On to dollar yen, and here you can see that still fading at the 50-day moving average 101.85. That was what, as expected, selling to strength up to that feature. Support at 100 yen, almost exactly. So probably that's the range, the two yen range at the moment. Looking to buy once more towards the 100 yen level. Onto gold, which continues to be disappointing. Here we've got the range either side of the 50-day moving average 1332. Really want to see this line of resistance from the beginning of July broken at 1340 before deciding on which move to make. That's it from me. More updates at the same time on Monday.